Good afternoon. Thanks for joining us for our Navigating the Home Buying Process webinar with today's emphasis on how to obtain a home loan. I'm Corby Gage. I'm the Executive Director of Coastal Housing Partnership. And with me today is Kim Pascage from our office. And today's webinar features three local loan officers: Veronica Chavez from PB and Associates in Santa Maria, Kelly Marsh from Cornerstone Home Lending in Santa Barbara, and Linda Hall from Guild Mortgage in Ventura. So thank you, panelists, for joining us. Veronica, Linda, and Kelly are all part of Coastal Housing Partnerships Network. And as part of this network, these lenders reduce their closing costs for their clients who are employed by companies that are part of Coastal Housing Partnership. And all three of these lenders are going to be at our upcoming home buying fair, which we're really excited to be hosting once again after COVID shutdown. So it's our first one in about 3 years. So you'll be able to talk to all three of these lenders at the fair. It's going to be on October 18th. That's a Tuesday from 4:30 to 7:30. You can come for 30 minutes or you can stay for all 3 hours as it fits your schedule. It will be at the Hilton Garden Inn in Goleta. And you can RSVP or register for the fair at homebuyingfairs.org, or you can contact Kim or me at our email addresses there. And we'd be delighted to have you join us at the fair. It's a great opportunity to meet potential members of your home buying team and to attend educational seminars as well. We'll have a number of educational seminars throughout the evening. So hope to see you there. So the format for today's webinar is that I'm going to be asking Kelly and Veronica and Linda some questions about the process of obtaining a home loan and getting ready to have your do your home purchase. The remainder of our time together will be for your questions. We want to make sure we cover all the questions that you have and make sure that we are meeting your needs in this webinar. Today's webinar will be recorded, and we can send you the link to the recording after the session ends. So the webinar format versus a Zoom meeting format means that your cameras are off, your microphones are off. We can't see you, we can't hear you. We do encourage you to ask questions. Please put them in the Q&A, and you can put them in there at any time you think about them. You're not going to disrupt us. We will get to those toward the end of our time together, but put those in the Q&A. You can put them in anonymously if you like, or you can leave your name on it as you choose, but we will be getting to those questions. So since the first step in the home buying process is meeting with a lender to find out how much of a home loan you can afford, information you're going to receive today is going to make you better prepared to take that important first step of meeting with a lender and getting on your path to home ownership. So let's get started. Linda, would you please just share a little bit about yourself so we, just as a way of introduction to our attendees? So Linda, you're muted.
There we go. I'll try.
Thank you. We had to have one of those today.
Of course.
That always happens, right? Thanks for starting us off.
First one. Anyhow, I'm Linda Hall with Guild Mortgage. I've been with Guild now for 15 years. I'm a producing branch manager. I've been in the industry now for 40 years because I started when I was 19. And I still love it, you know, even through all of the different cycles that we go through. It's still just, it gives me energy. I love sharing education. This is one of my favorites, the Coastal Housing Partnership. You know, we're able to reach out and help people, most of which are first-time home buyers, which is just a passion of mine and always has been.
Great. Thanks, Linda. Veronica, would you share a little bit about yourself?
Well, I work with PB and Associates, my broker, Paul Blanco, I started about 13 years ago, and I started with my real estate license, working for a broker. We have to have both. So after that, I got my NMLS license. Um, it's just a passion to me to be able to work with first-time home buyers, anyone that's looking to get into their home. I love the gratification it gives me just being able to help them. Sometimes clients come in and don't know where to go, and as well as Linda, we, just love helping people.
Great. Thanks, Veronica.
Uh-huh.
Kelly, would you introduce yourself?
Hello, good afternoon. Kelly Marsh with Cornerstone Home Lending here in Santa Barbara. I, like Linda, was a baby when I got into the industry. I was just going on 21, so I've been doing it for a little over 25 years. So I say that I've grown up in the mortgage industry, and I do love, I love, helping and strategizing and coming up with complex, creative strategies to help buyers get in our challenging market. So that's a little bit about me.
Great. Thank you all. Thanks for being here today. And attendees, you can see we have a wealth of experience and knowledge to share with you today. So we're just delighted to have these panelists with us. Kelly, we're going to start with you. Everyone wants to know, how do you get started? What do you do? What, something I see in my future or, short term. But what can a potential home buyer do to best prepare to obtain a home loan? When's the right time for them to meet with a lender? And does someone need to be ready to buy, or is it something just that they're thinking about down the road and they should, get with a lender? So, how does that whole process begin?
I think really, Corby, what I would do is start thinking about, what is your comfort level for a new payment? What do you feel is your comfort level? Kind of get those wheels in motion. I would also start to think about what funds do you have available for a purchase, or how can you come up with a savings plan in order for you to start saving and chipping away at your savings account, adding to it in order to get to a purchase. Maybe have some family conversations about it. Maybe there are some family members that might have gift funds. Maybe that's a possibility. I also recommend, hold on to your money. Don't make any decisions to pay off cars and credit cards. Wait until you take the next step of meeting with a lender. Because once you pay something off, you really can't get those funds back that easily. Make sure you pay your bills on time and that you don't make any large purchases, like go out and buy a car if you can avoid it, maybe wait. And lastly, really, it would be, looking at, a career change or starting a business, maybe wait until you've had that conversation with a mortgage advisor. The best advice is the sooner the better to get in touch with a lender. You don't have to be ready in your mind. I think a lender can start to advise you and educate you, as Linda said, like really provide that education in what are the steps you need to take. So you don't have to feel ready to start talking to a lender. The sooner the better.
Okay, that's great info, Kelly. I hear so often people saying, well, I'm going to go see a lender as soon as my credit, I'm trying to work out my credit. I'm trying to get this credit card paid down. And so often I think, oh, maybe that's not a good idea it's, you always, of course, want to pay off a credit card, but if you're paying off your credit card with money that could be a down payment. So are there mistakes made when people try to get too buttoned up before they see a lender?
Yes, all the time. We're like, no, don't do it. Just wait. You can always incorporate that strategy of debt payoff in your purchase strategy. You can always include it, but once you pay it, you can't get that money back very easily. So definitely before you make those changes, it's never too early to discuss the strategies with a lender.
Okay, and they're really going to help you come up with that game plan as to how to go
Absolutely.
forward. Okay, all right, that's great. Well, that leads us into our next question, Veronica, as to a pre-approval. What's a pre-approval? Understand that's what happens when you meet with a lender. What's involved in that process, and why is that important to get a pre-approval from a lender?
Okay, that's a really good question. What happens is a lot of people they will say, I want to get pre-qualified. So pre-qualified is when you actually come, well, where I work, it's where you come and you meet with me and I review all of your documentation, I review your credit, and I can give you a pre-qualification because myself as a loan originator, I can say, I feel comfortable with you going ahead and searching for a home. Your credit, your income is where it needs to be. Now, for a pre-approval is where I send all of your documentation, your credit, your income over to an actual bank. And that's where it gets underwritten. Underwritten means it's already gone to the actual bank where they're going to lend the money, and they are going to go ahead and give us a letter stating you have been pre-approved conditionally. Here is the items that we're going to be needing. Now, for that pre-approval, when you have it in your hand, a lot, especially in this market of what I've been seeing in our area, the sellers are looking for that because they want to make sure that when they're choosing someone that's going to be purchasing their home, that they've already gotten all their documentation into the lender that's going to be giving the money for the loan, and they've already reviewed it, underwritten it, and it makes them feel more at ease to go ahead and choose your offer on the home.
So it's a really good negotiating tool, it sounds like, in terms of.
Yes. Well, in this area, yes, that's what I have been seeing. And it doesn't take long. It takes maybe a day to
get a
to get
pre-approval.
it under. Yes. A lot of the lenders that we're using, they've been doing that just to, help the client be more aggressive with their offer as well.
Great. And is there a cost to get a pre-approval?
No, there's not at all. We don't
Okay.
charge anything. So.
So it sounds like a smart thing to do. Now, the pre-approval, so
Yes.
that's going to give you an amount of the loan that the lender would lend you once you find a property you want to buy. Is that the number that they're
Yes.
giving on that letter?
Yes.
Okay. So it sounds like once you have that loan amount, you know what your down payment is, you know exactly what your purchase price should be, and kind of be very focused and targeted in your home buying search.
Yes, definitely. Because if it's yourself at ease as well, you feel more confident in starting to look for the home. You know that you can afford the payment. Everything is working out. So then you just searching for your home, at ease, knowing, okay, oh, I love this home, and you're excited about it, and you're already pre-approved. So,
So that sounds like a really important tool to have.
yes.
Great. And thank you so much for that. Now, obviously, one of the things people are always concerned about, Linda, is our credit scores. And, why are credit scores so important? How are they determined? How does it affect, your ability to get a loan, the price of the loan? You could kind of give us a little primer on credit scores and how they're impacting a potential home buyer, if you would. You're muted again.
Sorry.
That's okay. It's nice not to have the background noise, so that's great. I understand why you muted.
I have a dog too, so it's kind of anyhow. Okay, so regarding FICO scores, lenders use credit scores to basically predict the likelihood of you repaying the mortgage. Okay, so lenders use what's called a FICO score. Okay, and it's also known as the Fair Isaac score. And your credit score is important because it can also affect your rate. It can affect the pricing of your loan. And more importantly, it can affect your loan options. What is going to be an optimal loan for you? So that's why credit scores are so important in the mortgage world. Okay. I wanted to talk a little bit about how it's actually determined, because that's something I think that can be, kind of vague for people.
It is
And-
a mystery. I mean, it's like,
Yeah.
what goes into that,
Yeah, so basically you can obtain a FICO score as long as you have one reported trade line in the last 12 months. Okay, that's what it takes to actually generate a FICO score.
And Linda, what's a trade line?
A trade line would be either a credit card or an auto loan or some other type of installment loan. Okay. So your credit report doesn't take into effect, just as we're running credit, your utilities, your car insurance, and those types of things. Okay. So the main factors that determine that is your payment history. Okay. And that actually makes up 35% of your score. So with that said, it's really important to be paying your bills on time. Okay. And then they also look at the outstanding balances on the accounts that you have. And that makes up a 30% of that credit score. And they like to see that being, for instance, let's say you have a credit card at $1,000. Okay. They really want to see that balance in like 15 to 20% range. Okay. So it's the ratio between what you owe and how much credit they have provided you with and approved you for. Okay. And so then length of credit history is another 15% of your credit score. Okay. Now, while you can obtain a credit score, a FICO score, with only having one account for 12 months, your credit score is always going to be higher if you have more credit than that, and you've established that. So that makes up 15%. Okay. And then new credit. So once you do have on your credit report, they will report inquiries. And an inquiry is when you've gone out and actually applied for credit. So whether it be a credit card or an auto loan, that's going to show up on your credit report as an inquiry. Okay. That makes up about 10% of that score. Okay. And then it also looks at your credit mix. So if you have a credit card, an auto loan, and maybe a gas card, it's going to look at that whole mix of credit that you have. Okay. And that's going to determine 10%. Okay. So you can see the real heavy pieces in there is your payment history and how much you owe as compared to how much credit they've extended to you.
So Linda, I heard that, by getting a pre-approval, there's an impact on your credit score. How much of an impact is that? And is it still worth getting that pre-approval?
Well, as you can see, what I just said, your inquiries is 10%. Okay. But with that said, when you are looking for a mortgage loan and maybe you might have your credit pulled multiple times, I think it's within 45 days, the credit bureaus look at, it's called like for like. So even if you're going to buy a car, okay, and they go and they run your credit through 5 different places, it's only counting as one inquiry on your credit report. Okay. The same thing goes for a mortgage loan. Okay. So it's very important for a mortgage lender to have your credit report and your score in order to be able to optimize navigating you through your particular scenario.
Okay. So it sounds like it's not that much of an impact to get that
No.
pre-approval, but maybe you don't want to be out there opening up 5 new retail credit cards, saving
Correct.
20% that day or whatever. You must stay
Correct.
away from doing something like that.
That will have a direct effect on your credit score.
Okay. All right. Good to know. There's always so many questions on credit, so I'm sure we'll have a number of those more specific ones in the Q&A. That seems to always be a a big issue. But, it seems like that's another good reason to talk to a lender is that they're going to be able to look at your credit report and identify the areas where your score could be improved. They look at, credit reports, credit scores all day long, and they can identify, oh, this collection is what's really hurting you, or, maybe you have too many balances or whatever. They can maybe identify that for you. So seems like it's always a good idea to meet with that lender before trying to fix your score.
Yes, there's many ways to improve your score. And like, I highly suggest to consult with your loan advisor so that they can guide you. I think Kelly mentioned that as well. Like, it's really important because we have ways, there's certain systems that we can plug into, and we can tell you exactly what you need to do to increase your score.
Great. Thank you. So Veronica, we're always getting asked questions about first-time homebuyer programs. Are there any special interest rates or loan programs or down payment assistance for a first-time home buyer? What kind of first-time homebuyer programs are available? Who's a first-time home buyer, and are those generally income restricted, or is it just whether you're a first-time or a move-up buyer? What can you tell us a little bit more about that?
Yeah, on a down payment assistance program, there are many out there. You just have to know where you're going to fall into, and that's where it's very important that you speak with a loan originator, that you talk to them about what you qualify for, because there's programs, one that's very popular is the CalHFA program. There's some that have a down payment assistance program. They help with your closing costs. Some are seconds, silent seconds where you have to pay them back at the 30-year mark. There is some that they're forgiven within 5 years. But to be able to, for any loan originator to be able to tell you what you can go into, is we have to see what your debt to income ratio is and see what your credit falls into. Your approval will be based on that with these down payment assistance programs, because they're all different. Some may require that, that are income restricted. So if one is allowing you to, I'm just going to throw out a number, to be able to make $80,000 a year, there may be some that are up to 140. So it's all going to depend on your situation. And as soon as you get pre-qualified, any, loan originator can offer you what you can fall into, and then go over it with you and see if that's going to work for you or not. Now, being a first-time home buyer means that you have not purchased anything. You do not own a home within the past 3 years. That is what gets you into to be able to qualify for these programs. Like I said, everyone is different, but like the one that I am talking about, the CalHFA, you do have to be a first-time home buyer, meaning you have not co-signed, you have not owned a home. And if you have co-signed, you have to be a non-occupying co-borrower, which means that you signed for somebody, but you do not live there. You have not made a payment, and you have to prove that you have not made a payment within 3 years. So there's a lot that goes into it, but there are programs out there to assist you. It's just going to depend on your situation, your scenario, and then we can go ahead and offer those to you.
Okay, so that's interesting. So you can have owned a home before, but if you sold it and haven't owned something for the last 3 years,
3 years,
still considered a first-time home buyer.
Yes.
Okay. That's really great information. Good. Okay, Kelly, big question, down payment. I mean, how much down payment does someone need? So often we hear 20% down, and in this market, how does that ever happen? What are options? Are there low down payment options, or does someone need 20% down? How do they know what to do and how to proceed? Is that something the lender's going to help share with them?
Yeah, and I do think that this is probably one of the most common myths is that you need to have 20% down to purchase. So the answer to that is absolutely not. You do not need 20% down to purchase. Especially in our area, a lot of times people think you need 20% down. Our price points, you still don't. Veronica really touched on a lot of the down payment assistance. There are many, and as Veronica said, getting pre-approved, having that process started. Your mortgage advisor can look into all the different programs and see what parameters you fit into, whether you're a first-time home buyer or you're not. What works for you, what's your income level, your family size. The most common loan across the country is a traditional conforming, may have heard these names thrown out there, but Fannie Mae and Freddie Mac. And you can do as little as 3% down. There's FHA financing, which is 3.5% down. Veronica mentioned Cal HFA. They have several different programs available. There's VA loans for eligible borrowers. There's VA loans that are 0% down. And those loan amounts can go into the millions. There's USDA. I mean, the list goes on and on. There are some great local options with the SB Housing Trust Fund. I know, Corby, you're really familiar with them. Down payment assistance where they can loan up to $100,000 or $125,000. There's some employers for some of the larger employers in Santa Barbara County. I'm not sure about Ventura County, but there are some employers here that offer mortgage assistance programs. There's affordable housing units within the county, Carpinteria, Santa Barbara City, the county, and Goleta. So there's just a lot of programs. So the sooner you can get with the mortgage advisor, the better, because then they can help guide you to make the best choice.
That's great info, Kelly. So it sounds like instead of someone just waiting for, to feel like I've got my down payment saved, I've got my credit score in line, you just have to meet with the lender right away, because there could be a down payment program out there that you're ready right now, or you're ready in 6 months and you thought it was going to be 3 years away, and you could get into something right now. And the lender would advise you on that.
Absolutely. And I think it kind of ties back into, what Linda said in terms of debt, and what you think might be the best strategy is actually not the best strategy. You might have more down payment, but we might advise to keep some of that and pay off debt. Again, it's just, you can't start soon enough to have the best options to get you into a home.
Okay, so what if I don't think I have anything saved for a down payment? I have some 401k, but I don't think I have anything else really saved, but I've got pretty good income. Should I meet with the lender anyway? Or, what do you think?
Yeah, so acceptable down payments, to kind of just touch on that. I mean, it's actually quite common that we see buyers borrow against their retirement accounts. The best way is to check in with your retirement, go online to your retirement account and kind of see what options there are for lending. But there's, checking, savings. So if you don't have checking and savings, there's also gift funds. Gift funds, you can talk to family. Generally, that needs to come from a family member. But the retirement accounts is actually quite common. And most retirement accounts will let you look at borrowing against them. So it's a secured loan against your retirement. That can be a source. That can be 100% source of a down payment. There's other options I can get into if you'd like, of kind of some more of down payment options.
Okay, well, it sounds like the key here is just meet with the lender and let them, give you that wealth of information as to, again, what your game plan is, what your strategy could be, showing you what the different choices are. And, so many loan programs out there. Now, do most lenders offer low down payment loan options, or is that a specialized thing? How do you know who to go to for that?
Most lenders will have the products. There might be some products like the bond programs Veronica mentioned, the Cal HFAs. Maybe not every single lender offers it, although most do. The Housing Trust Fund, there might be some differences, but I would say generally most will offer these programs.
Okay. And that's Santa
Mostly
Barbara
within the
Housing.
Coastal Housing Network, Corby.
Yes, yes. Well, and the great thing about staying in the Coastal Housing Partnership Network is that savings on closing costs. So, and then that Santa Barbara Housing Trust Fund loan is a wonderful option for someone buying on the South Coast. And I think they just opened up a new program in North County as well. So that's certainly something to explore, and something that all of, I think the majority of Coastal Housing Partnership lenders work with those. There are some restrictions there. So thanks for bringing that up. That's important. Well, Linda, kind of this, talking about, selecting a lender, I think this is a really important piece. So often I hear, well, I'm just going to call around and find out who's got the best rates, and that's how I'm going to pick a lender. And there seems to be some, reasons for that. But is that really how I should approach this? Or, how would someone select a lender? How do you choose a loan officer? What other factors other than interest rates should someone be looking at? And should they be looking at interest rates?
Yeah, so I believe personally that a referral basis is the best way, because that either if it's a family, a friend, maybe the real estate agent you're working with, who will usually always give you referrals if you are working with someone, you already know, right, what that experience has been. Calling around for interest rates, you're only going to get what's happening at that minute, because our rates change every single day, and they have the potential to change multiple times during the day. And just like how you might have investments in stocks, we're based on bonds. Okay, so all of that fluctuates all the time. So shopping around for a rate is really only as good as that second that you're on the phone. Okay, so I believe the most important thing is, one, that you're comfortable with that person. And I think that you're going to find that soon enough. Education is huge. If that person is willing to spend the time to talk to you through about, I call it my mortgage banking 101. I like to spend, and recently it's been on Zoom calls and whatnot, but I like to spend that time. And I know both Veronica and Kelly are in the same mindset, is that initial piece is so important. If somebody is not willing to do that, that's definitely a red flag to move on. So those are the things that are important to me, that I think is important for everyone. And then also the product mix, which we've talked about here. You want to be able to have a product mix and someone knowledgeable about it. So if you go in as a buyer and you're asking about the Cal HFA program, or is there any down payment assistance programs, and the person doesn't know anything about it, that's another red flag if that's what you're looking for. So, and both Veronica and Kelly, I'm sure we all have real estate agents too that we've worked with before. So like I said, when you're comfortable with someone, we can also give referrals to people that we know that you're going to be taken care of.
That's great information. So it sounds like you're really, as the potential borrower, really in the driver's seat as to who if you meet with someone and you just don't feel like you connect, or you feel like they're not taking the time to answer your questions or give you that education you need, you can just turn around, walk out the door, go see somebody else. So you're not obligated to stay with someone.
And with that said, Corby, it's really important to identify that in the beginning, because you don't want to be in a contract where you have contingency dates and things that you need to meet, and 7-10 days into it, you're like, I do not like this person at all. I'm not feeling comfortable. They're giving me different information, that type of a thing. You really want to have that dialed in before.
Mm-hmm. Another good reason to meet with the lender sooner rather than later, before you've even started house hunting.
Yes.
And if you've already started house hunting, that's fine. But if you haven't, and you're fresh to the process, get with a lender. You can see, through so many of these answers that Linda and Veronica and Kelly have given us, how important that is to have that relationship established and make sure it's someone you connect with. And you have to have that comfort level with that loan officer. And even if you, sometimes people are hesitant because they think, I don't think I'm ready to buy for a couple of years. A good loan officer is going to be delighted to work with you starting now. They are not going to have any problem with that. And you will feel that from them. If you feel
Absolutely.
like that person is, just trying to, maybe make their rent payment or their mortgage payment and they need you to buy tomorrow, that's not a good sign. You want someone who's going to stay with you. And I've heard so often that some of the favorite loans that a loan officer has done been someone where they worked with them for 3 years and they worked to try to get their credit together and their down payment. And they're going, this was my favorite loan of all time. So really don't feel like, you are not in a position to be worthy to go talk to a loan officer. A good loan officer is going to want to talk to you and meet you where you are and help you get on that path to home ownership.
Absolutely.
Great. Okay. We've got time for questions. And Kim, what questions are you seeing?
Yes, yeah, we have some questions. And again, feel free to put those in the Q&A. We'll start with our first question. If you're buying with a domestic partner, does that change things?
Linda, would you like to take that?
Sure. No, it doesn't. It's perfectly fine.
Yeah, so you don't have to be married. You don't have to have any relationship at all legally to someone. That's fine to have a partner.
Absolutely.
Great. Good.
Perfect. And it says, it was mentioned to get pre-approved and all documentation is sent to the bank. Do we as the buyers get to choose the bank, for example, a credit union that might have better rates?
Veronica, do you want to take that? You're muted. There you go.
Okay. When I was talking about sending it over to the bank, what I do is I go over all of your credit, your income, and I see, because I have over, there's so many banks that we can go through. And what I look at is to see who has the best rate at the time. And that way, and I talk to the client about that, and then they can choose, who they want to go with.
So they can choose. Can they direct that to you, or you have a certain investors that you that you can get?
So working with a broker, we have at the brokerage probably over 20, 25 different lenders. There's maybe 5 that I would say, and then from those 5, maybe 3 that are the top. And the way that I know that is because every day I'm looking at what they're offering, where their rates are, what's going on in the market. That's my job, is to be able to know. And that way, when I'm meeting with a client, I can tell them, okay, this is what's going on with the market. These are where these banks are. This is where I would like to take your loan. Are you comfortable with that? Because at the end of the day, it is the buyer, choice. But I can guide them and tell them this one here, has the best rates right now. They have their pre-approvals done in one day. It's an amazing bank. It's, the top. So I can let them know, and I will let all my clients know where I'm taking it and who they are. But they do have a choice. They can say, I don't want to go there. And I could say, okay, well, I have these other ones to choose from. So at the end of the day, it is where the buyer wants to go. And I can just tell them what they will get with each lender, where their rates are, because each lender is different.
Great. Thank you.
Uh-huh.
Thanks, Veronica. The next question is, what's a goal range that we should strive for in terms of the FICO score?
Kelly, do you want to take that in terms of what FICO someone should be shooting for?
Yeah, there are different ranges. So, you can have a credit score as low as, 580. It will be more expensive. The credit score is going to drive the interest rate, and sometimes the product availability. So, minimum wise, you really want to be in the 580 range. But I do want to say this, there are a lot of different credit score, different types of credit scores. There's a mortgage credit score and a consumer's credit score. So what you see as a consumer online is very possibly going to be different than what a mortgage lender will see. There are different algorithms. So they like to keep you on your toes. So I say that in what you're seeing for your credit score is not going to match most likely what a lender is going to see. So 580 really minimum. Ideally, anything in the 700s is going to be a great target, but it's not going to be the minimum. So it can be in a wide range, anywhere from 580 to 800. It does have a wide range, and
So it
they
sounds like
change. They
that's-
can change daily.
Yeah, so it sounds like that's another good reason to get that pre-approval is if the lender's going to run your credit, you're going to then know what that mortgage loan credit score is and what your target needs to be if you need to improve or not, and what your loan options are.
Correct.
Okay, that sounds great. So 580, that's encouraging, but so you're just going to pay a little higher interest rate if you have that lower score.
Yeah, and you're going to have some product limitations on what's going to be available to you. So, I mean, that's kind of your bottom of the limit. But we've seen people go from a 580 score with some of the options Linda mentioned, where we have softwares we can see what can improve it, where we can get them into the high 600s, mid 600s, sometimes 700, depending on what it is that's holding their credit score back.
So you can get their credit score improved with enough time and tools. And so you're saying if you're in that 700 range, you pretty much have most loan options available to you?
Yes.
Okay.
I mean, even in the high 600s, you're going to have most options available to you. It's really when you fall below, 620 has been kind of that norm level, is kind of the entry level for Fannie Mae, Freddie Mac, the most common loan across the country. But there are options with something less than.
Okay. And if you're buying with a partner or a spouse, obviously your credit scores are different. Which credit score are you using as a lender, or both?
Generally, most loan products, not all, but I would say the majority of loan products are going to use the lesser score of however many borrowers. So if there's 4 borrowers, they're going to use the lesser score, the middle of the 3. So there's 3 credit scores. So you take the middle. Sometimes we only have 2, so we'll take the lower of the 2. And you're going to always look at the worst case of however many borrowers you have.
Okay. All right. Great to know.
Great. And then someone is asking about when looking at housing options, are foreclosure something to avoid due to financing?
Linda, do you want to take that?
Yeah, actually, foreclosures aren't what they used to be. I mean, first of all, we don't see them very often anymore, but no, it doesn't necessarily mean that. I mean, unless there's property condition issues or something like that, then no, then typically it's not an issue. If you're buying a foreclosure.
Okay. Great.
Okay, great. There's a couple questions in here, so let me just piece it out for a second. What if there are multiple people buying a home? How does that come into play when trying to figure out the amount we qualify for? And how do we take advantage of first-time homebuyer programs at the companies we work for?
Veronica, do you want to take that one?
Yes. So when you have multiple people, let's just say it's you, your brother, and your mother and your father, just for instance, what we're going to do is we're going to get all of your income together and all of your debt together to see what you're going to qualify for. So it will go off of, like Kelly was saying, of the credit score. it's going to go off the mid score of the lowest of the four. We're going to be going off of your income and your credit. And then with that, we'll be able to qualify you. And then what was the other thing? How do you take advantage of what your company has to offer?
Yeah.
Okay, so maybe you're talking about coastal housing partnership. If your company offers that, if you're working for the Santa Barbara County, it's going to be who is signed up. So like I'm signed up, Linda signed up, Kelly signed up to be able to do loans and get you the credit. So I believe there's an email, is that right, Corby, where they can send it to you and get their letter of approval
Yes.
through coastal housing? Okay,
Yeah, Kim, if you could put that in the chat.
that would be
there's,
great.
Yeah, there's a link on the homepage of our website that's a letter of authorization application. Fill that out, and then you show that to the network partners that you're working with, lenders, real estate agents, all can save you money on your closing costs.
Mhm. And then there is, let's just say, I'm not sure what the question was directing, if it was coastal housing or if their company had any anything available to them from purchasing. So you can always go to your, I believe, benefits department, human resources. They can probably guide you, because sometimes clients don't know that they can get money out of their 401k to be able to use for their first time, home purchase without being, dinged on that. So that's something that some of the employers do offer. So it's all going to be up to what your certain employer is offering. But for the coastal housing, that's the way you sign up for that.
Great. Thank you.
Yeah, and I know that Cottage and the city and county have some programs in-house within those companies. And I know that you can kind of directly ask your benefits office. Yeah. Thanks again for all these questions, everyone. There's about 3 more questions here. This may be much further down the road, but I'm wondering how to navigate a market where other buyers are coming in with cash offers over list price, and strategies to be successful in that kind of environment.
Kelly, we're going to give this tough one to you.
Okay, so I will say, actually, we have been faced with this challenge for the last 2 years. We're probably shifting a little bit out of that right now. We're currently in that shift. But I think one of the best ways you can compete with cash buyers is to be fully underwritten. So you have actually gone through the underwriting process. Check your income's been cleared, check your credit's been cleared, check your down payment assets have been cleared. Everything's been cleared, subject to you finding the property. So that allows you to go in on your offer and compete better with cash buyers. You can look at waiving some of the contingencies in your contract, your financing contingency. You have that done, it's completed. There are a couple other contingencies you can consider waiving. And then the biggest thing is really looking at a faster close of escrow. You can look at closing on that home in sometimes 12 to 14 days. So again, you're coming in as close to a cash buyer as you can to compete. And that is a strategy that's worked great over the last year and a half or so. And I think going forward, I don't see a reason to change that, even if there aren't as many cash buyers. I think it just takes away some of that stress of the paperwork shuffling and some of the unknowns. You can get that all out of the way and then really focus on your purchase.
Great, thank you.
Great. Yeah. 2 more questions. So the first one is, if I'm looking for a mixed use opportunity, does that affect the type of loans that I'm looking at?
Linda, do you want to take that?
Yes, it does. So that would definitely, there's only so many investors that do lend on mixed use. And typically, you're also going to be looking at higher down payment requirements, credit score requirements. Kelly, you can jump in on this too. It's just like basically the mixed use piece, while it is, we're seeing more of it, the investors overall don't really have an appetite for it. So we have to get into more specifics and go out to different investors that do offer the product.
But it is available.
Yes.
Right. Okay.
Great. And one last question here is how do you know how much to set aside for closing costs or property taxes?
Veronica.
So the closing cost is usually about, I'd say about 2% of the purchase price. It's just to be, quick. It could be a little bit less, it could be a little bit more, but if you have about 2% of the purchase price, that's always pretty much the closing cost. That does not include your down payment though, just to get that straight.
Okay, so planning about 2%.
So if you're about 600,000, you're looking at maybe about 12,000, which it should be less than that. But if you're there, just go a little bit under. That's what I usually go off of.
Okay, and of course, if you're using the Coastal Housing Partnership Home Buying Benefit Program, you can save generally 50% or more of your closing costs.
Yes.
So make sure you look into that and keep that number down so you don't have to save quite as much up front. I have a question that kind of has come up. Kelly, I wonder if you'll take this. Is what's the difference between working with a lender who's a broker or a banker or a bank? Is there anything we're looking for as a potential borrower there that makes a difference?
Yeah, I mean, I can first say that working with the individual mortgage advisor, whether they're a mortgage bank, a bank, or a broker, in my opinion, is the most important thing, is working with someone that is a trusted, knowledgeable source, someone that you feel comfortable with. I think that is the number one selection, right? So first off, that's important. But there is a difference between a mortgage broker and a mortgage banker and a bank. And Linda, correct me if I'm wrong, but I believe you and I are mortgage bankers, and Veronica, you're a mortgage broker. So, and a bank is a bank offers a lot. So we'll start with a bank. A bank offers a lot of different banking services. They offer, checking accounts, savings accounts. Sometimes they have investment divisions, commercial divisions, and part of their bank generally is going to offer residential financing. So that's a bank. They have a lot of different services, products and services that they offer to customers. A mortgage bank, we only offer mortgages. So, but we also underwrite, fund, and do everything start to finish on a loan. So that's the difference between a mortgage bank. And mortgage bankers generally can also broker. Now, a mortgage broker they're out there looking at, as Veronica said, these 20 different relationships to see who's got what and all the different products. And they're selecting kind of who at the time is going to be the best fit, not only with the rate, but in terms of the product. And so that's the difference with a mortgage broker. And Veronica, add anything in there as well. I can speak about a banker all day long, but a mortgage broker, throw in your 2 cents, please, on that.
Yeah. As a mortgage broker, I do have several different loan options as well. Right now, manufactured homes, mobile homes have been really huge. We do bank statement loans, we do investment loans, hard money loans, we do commercial. So there's so much that we offer, that can be used. And that's why I say it's very important, to come in and know what you're looking at. If you're looking for your first time home, you're going to be looking at a conventional loan, at an FHA loan, down payment assistance loan. And we have several different banks that offer different stuffs. Like you were saying, Kelly, that Some of the lenders don't offer the CalHFA. So out of those that I'm looking at, maybe 3 will offer it, so that's where I'm at here with working for a broker, which I like, because then I get to see what would be the best fit for you. Mhm.
It sounds like all have, really good products, and like you
Yeah.
started off with
Mhm.
Kelly, really comes down a lot to the loan officer and who that
Yes.
individual is you're working with, because that's that relationship, and they're going to work hard to find you the best deal that they can among the products that they have. So they're
Mhm.
really your advocate and fighting for you in terms of getting you a good deal.
Correct.
Kirby, I do want to. It's been on me to mention this. I want everybody to know that you don't. It's been a question to me. They're like, "Well, I haven't been on my job for 2 years, so I know I don't qualify." And I'm like, "What do you mean?" And they're like, "Oh, it's because." I go, "Well, were you working before?" And they're like, "Yes." And I go, "Oh, you don't have to be on the same job for the 2 years." And like Kelly was saying, you don't have to have 20% down to get into your first home. So I wanted to point that out, because sometimes, it's people say, "Oh no, you have to be for 2 years on your job." It does not have to be the same one. So I just wanted everybody to know that.
I'm glad you brought that
And
up.
that's great, because someone
Yeah.
was just saying that if they change employers, how does that affect them buying something? And you would say that that's fine, or
It would be that's fine, but the lender is also going to look at if you were a mechanic and now you've become, let's just say, I don't know, medical assistant. I don't, they are going to want to see some. Well, first of all, your certificate that you got, your diploma for that, will actually help you to where we can use your first pay stub to go ahead and get approved. So, that would be something that a lot of people don't know. And a lot of people don't know that if you don't have the 2 years, let's just say they're working for the county and they've been on their job for 6 months, but they had to go to school before that. They got their degree and now they're in the position they're in. You don't have to have the 2 years, because we're going to go ahead and be able to use that your schooling time to qualify you.
There are so many misconceptions out there about lending and things that float around, and whether they're old guidelines, or whether it's just one person had that happen to them and now that's running rampant. That is another good reason to just get with the lender. Stop trying to think what you do or you don't know. Find out what is actually valid and true, and the lender will share that with you.
Right.
Great. And one last question. Do mortgage brokers get paid different amounts from different investors?
Was that question, mortgage broker get paid different amount?
Do mortgage brokers?
So then we're going to let Veronica take that, because she is the mortgage broker.
So a mortgage broker will, like my broker will sign up for different lenders. Those different lenders, there's going to be pretty much with ours, it's the amount, the same amount pretty much around. Now, when you're talking about different loan products, those will be different. But pretty much as far as the first time home buyers, like the FHA, the conventional, the broker will get paid across the board pretty much the same. And that's not not a cost to the buyer. It is a cost where the lender will pay for that.
Okay. Great.
I hope that answers.
Yes. Kim, anything else?
That's it. Yeah, we had so many great questions today, so appreciate that.
Yeah, and we're right at 1 o'clock. So thank you for attending today. We will be sending you out a link to the recording, so you can watch this again if you missed anything. And panelists, thank you so much for your expertise, your knowledge, your time. This has been a wonderful webinar, and we look forward to seeing you at the Home Buying Fair, and we look forward to seeing attendees at the fair as well. So have a great afternoon.
Thank you.
Thank
Thank
you.
you. Thank you.